Well, welcome to your 2024 edition of Rogers Capital Market Commentary, where we attempt to be the antidote to water cooler wisdom. Well, 2023, wow, what a great bounce back year, up almost 25%. A huge November, up 9%, another really outstanding December, up another 4.5%. Almost half of our return came in the last 2 months of the year, but up almost 25% last year. So let me take you back though. 1 year ago, in my 2023 Rogers Capital Outlook, I walked you through two pieces of good news that I had for you. The first was that 2022 was over. That was good news in itself. But the second was that the math supporting, historically at least, rebounds from tough years, a tough 19% drop in 2022. The math supporting a rebound for 2023 was promising. And we walked you through a couple of different things. The first was 2028, the rebound from that tough bear market, a 23% bounce back. We looked at 2022, where we saw a 26% rebound from that tough environment. So the historical, the promising expectation based on history of a rebound from a tough market was there. So what did we see last year? I mean, interestingly, we didn't see anything magical, not any huge optimistic things that happened. In fact, there was lots of negative news. But as inflation softened, as the Fed stopped, raising rates, we saw things, the markets turn and move. The big boys, Wall Streeters, anticipating that things would get better. And the markets rebound big. I think another pretty big factor was that we saw a rebound from oversold valuations. So, for example, big tech, the big growthy tech names, the Triple Q, NASDAQ 100, for example, should not have been down 35% in 2022. It was oversold. And so it rebounded big, up 53%, by the way, in 2023. So that's 2023. Looking forward in 2024, what should we expect? Well, the S&P earnings per share estimate, remember, profits are what drive markets, okay? Profits, earnings. The earnings per share estimate's now $235, which is up 9% year over year. That puts the S&P 500 price to earnings ratio, the PE ratio, over 20, just slightly over 20 on a 2024 earnings forward-looking basis. In an area where both those pointing to modest returns for this year. We have some positives, okay? Resilient economy. We have easing inflation pressures. We have a weakening U.S. dollar, a weaker U.S. dollar, and technology strength in the spades. We've got some negatives. We've got global tensions, of course. You've got what's going on in the Middle East. You've got U.S.-China tensions. You've got a Fed that, if inflation is persistent, it will hike again, or at least keep things where they are as opposed to cutting rates. And I think even early this year, we've seen some portfolio rebalancing. I think you've seen the big boys, the Wall Streeters, taking profits on those big bounce back gains from last year, which has kind of made things, a little bit jumpy here to start the year. Now, economists expect a mild recession, the soft landing, mild recession in the beginning to middle of 2024. That may lead to some interest rate cuts. In fact, Wall Street's kind of betting on that or hoping on that from the Fed. and maybe offset some of the economic and market impact. While interest rates may glide lower in 2024, they are likely, I feel like likely to stay higher than what we saw in the pre-pandemic era. In fact, I'm not sure those minuscule rates in the decade preceding the pandemic, I think those are certainly an anomaly, and I don't think we're going back to those. Inflation's come down significantly, but it'll continue in some places. I don't have to tell you this. Housing, food, you're at the grocery store, you see it, medical. And so stocks are entering a phase where the focus will be on interest rate stability, which opens the door for a return to stock market norms, 8 to 10-ish%. The expectation is for a solid but not spectacular return for the S&P this year, high single digits. And that's in line with the historical averages anyway, though it will not be without historical volatility. Those of you who've been clients for 10, 15 years, you've heard me say this 1,000 times. Here it comes again. This is not a straight line. That's not how this investing works. We have volatility. It's part of the game. It is the game. So 4, 1, and 1 and 4. 4 times a year we see a 5% pullback. Once a year we see a 10% correction. And then 1 out of every 4 years we have a bear market. But volatility, it comes with the territory. Okay, so that's 2024. And oh yeah, almost forgot. It's an election year.